Hey traders, welcome back to the Profitable Traders. After watching this video, you'll be able to identify the direction of a trend in any given market, whether it's forex market, stock market, or cryptocurrency. This strategy applies to any given market. And this strategy doesn't require any fancy indicators. It's all based on price action. Therefore, if you want to be alerted with any new trading tutorials every week, then smash the subscribe button, the notifications bell, so that you'll be alerted whenever we upload weekly videos. Without wasting more time, let's get started. Before I enter into this strategy, let me first demonstrate it on a blank chart. This strategy is typically based on price action. On this price action, you just have to understand the moves of the market. Let's say we have a market which makes an impulsive leg, a pullback, and another impulsive leg that closes above the previous level of resistance. So in this case, this strategy, what you have to do on this strategy is to look for an impulsive leg, then a pullback, and then another impulsive leg that closes above the previous level of resistance. When such moves have happened in a market, another thing that you have to do is to wait for a pullback that either pulls back to this level of resistance or makes a pullback to the previous level of support. But make sure that the market doesn't make a pullback that closes below the previous level of support. It has to be either a pullback at the resistance level or a pullback at the support level, or in between. Now with this example, let's just say that the market just made a pullback in between the resistance level and the support level here. When the market has made such a move, what you have to do now is look for a confirmation that this market is likely to go to the upside. And this is what I normally do with this strategy. I wait for a market that makes an impulsive leg, a pullback, and another impulsive leg that closes above the previous level of resistance. If this market makes a pullback that does not close below the previous level of support, but in between the resistance level and the support level here, I look for a confirmation to buy the market. And buying this market could be at a 1-to-1 risk-reward ratio or a 1-to-2 risk-reward ratio, depending on the value of the trade and the strategy that you use. Let's look at the example of a downtrend. At a downtrend here, let's say we have this market that makes an impulsive leg, a pullback, and another impulsive leg that closes below the previous level of support here. Now if this market makes such a move, what you have to do is to wait for a pullback that pulls back to the previous level of support or a pullback to the previous level of resistance, but make sure that this pullback does not close above the level of resistance, above this level here. So it has to be either a pullback to the resistance level or a pullback to the support level, or in between here. When such a move has happened in the market, what you have to do again is to wait for your confirmation, which is an entry reason on a lower time frame. Then you enter the market to the downside. And this is how simple this strategy is. You look for a market that makes an impulsive leg for the case of an uptrend, a pullback, and another impulsive leg that closes above the previous level of resistance. Now when that has happened, you wait for a pullback that either pulls back to the previous level of resistance or pulls back to the previous level of support, or in between the resistance level and the support level. After that has happened, you look for a confirmation to buy the market. And for the case of a downtrend, you look for an impulsive leg to the downside, a pullback to the upside, and another impulsive leg that closes below the previous level of support. When these moves have happened, We now wait for a pullback that either pulls back to the previous level of support or pulls back to the previous level of resistance, or in between the support level and the resistance level. After that has happened, then you look for a confirmation to sell the market. After you've seen the explanation of blank chart, let's go now to the real chart. Let's say that we don't know what's going on from this side. Now we have this market that has made an impulsive leg, a pullback. Let's see whether it has made another impulsive leg to the downside. Yeah, we have this impulsive leg that closes below the previous level of support. When this thing has happened, what you do again is to wait for a pullback that either pulls back to the support level or pulls back to the resistance level. But make sure that if this market makes a pullback that closes above this resistance level, then this strategy is invalid and you should not sell the market. Let's say the pullback. We have the pullback here. The pullback is exactly here. It has made a pullback to this support level. After this has happened, then you look for a confirmation to sell the market. And what do we have? Boom, we have the market that went to the downside, and this could have been a win. I don't know how many pips this could be. This could be 300 pips. This is a daily time frame. This could be around 300 pips and a massive win. Now what do we have again? We have this market that made an impulsive leg. Now it has made this impulsive leg. Let's see how far this impulsive leg has gone. It's here. I think the trend line is not visible. Let me turn it to black. After this impulsive leg, what do we have? We have a pullback. Now if we have another impulsive leg that closes below this level of support, then we'll be looking for another pullback, then look for a confirmation and short the market. Let's see what has happened. Unfortunately, we didn't have an impulsive leg that closes below this level of support. So in this case, we're not going to sell this market. Now what do we have again? We have a market now that has made this, now becomes our impulsive leg. We have this from here to here is our impulsive leg, and we have a pullback here. Again, we have another impulsive leg that closes above the previous level of resistance. What do we have to do again? Now we have to wait for a pullback. This pullback should not close below this level of support. It should be a pullback to the resistance level or the support level, or in between the resistance level and the support level. Then you look for a confirmation and buy the market. Let's see how this would have turned out. Wow, this would have been a win. From here to here, this would be a win of about, let's see, win of 200 pips. You see guys how this price action strategy is? Just using price action to determine the direction of a trend of a market, and you buy or sell the market. Now what do we have again? Now we have this market now made this pullback. Now what we're waiting again, now we're waiting for an impulsive leg and a pullback. After this pullback, I'm looking for another impulsive leg. Do we have another impulsive leg? Let's check it out. And now after this has happened, we have a market which is in a consolidation. In this case, I wouldn't trade this market now. This market is in a consolidation. What do we have here? We have a market that made an impulsive leg, a pullback, and another impulsive leg that closes below this level of support. Now what you have to do here now is wait for a pullback that either pulls back to this support level or to the resistance level, or in between the support and the resistance level, and look for your confirmation to short the market. This would be a win too. And guys, what I'm doing here, I'm just picking out this just a random chart. I didn't pass through it before. It's just a random chart, and I'm just picking out some winning trades to demonstrate how this strategy is profitable. This strategy doesn't have 100% winning rate. There is no any strategy that has 100% winning rate. This would have been a win. Now we have a pullback here, and this pullback did not close above the previous level of resistance. It made a pullback here, and when it made this pullback here, I took this trade in October of 2020. I still have this tool here. It was a winning trade. I think it's about 1 to 1.5 risk to reward ratio, and it was a profitable trade based on this trend continuation strategy. After that, we had a market that made this move, and this impulsive leg did not close below this level of support. So if you were to trade this strategy, you wouldn't sell it here because this pullback failed to close below this level of support, but it made a pullback and another impulsive leg that closes below this level of support. For that case, you look for a pullback that pulls back to this level of support or a pullback to this level of resistance. What do we have? We have a pullback to this level of support here, and I'm pretty sure if you drop to a lower time frame, this could be a win depending on how you place your take profit and your stop loss. Let's check it out here. How many pips would be? 92 pips. 92 pips on a 4-hour time frame or a 1-hour time frame. This is a massive move, and I'm sure this could be a win, but it could be a loss to some people that put a very large stop loss, and for that reason the take profit could be large, maybe to the previous level of support, and this could be a loss. Or if you trade using trailing stop, this could be a break-even trade. Now we have an impulsive leg that closes above this level of resistance. What do we have to do? We have to wait for a pullback, but this pullback is not of 2 candles. So let me say that the impulsive leg is up to here, and we have a pullback here, and this pullback made a pullback here, and another impulsive leg that closes above this level of resistance. Do we have it? Absolutely, we have this impulsive leg here. After this has happened, what you have to do now is to wait for a pullback that either pulls back to this resistance level or to the support level, and look for a confirmation to buy the market. Let's see, what do we have? We have a pullback, and this pullback was below, this pullback closed below this level of support, and for that reason you cannot buy this market, because now this market is likely to change the trend of a market because it has closed below the previous level of support. And I think this was at a key level of structure. It was exactly here at a key level of structure, key level of resistance, and when this market came up here, I sold the market, and it was a winning trade around 1 to 4 risk to reward ratio. On the 1st of December 2020, this was a winning trade, and it wasn't based on this trend continuation strategy. It was based on a counter trend strategy where you look for a key level of structure, then when the market reaches to that level of structure, then you look for a confirmation to sell the market if it is a resistance level, and if it's a support level, key level of support, and the market comes back again to that key level of support that has been tested multiple times, then you look for a confirmation to buy the market. Now what do we have again? We have an impulsive leg that closes above the previous level of resistance, and a pullback, and another impulsive leg that closes above the previous level of resistance. What you have to do now is to wait for a pullback that either pulls back to the resistance level or to the support level, or in between the resistance and the support level, and look for a confirmation to buy the market. Now we've got this market pulling back in between the resistance level and the support level, and boom, we have a massive win, probably I think more than 300 pips. Let's check it out. Is around 185 pips. This strategy applies to any time frame, any market, and any currency pair, if it's forex trading. And if you have found value out of this video, would you give it a thumbs up, guys? Support this channel and subscribe if you haven't yet subscribed, and turn on that notifications bell so that you'll be alerted every week whenever we upload new videos. Share this video with your friends and recommend this channel to your friends if you find value out of it. Thank you guys for watching, and see you next week in the next video.